Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of September 16th to September 20th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation. As market participants closely monitor key developments, attention is riveted on the impending rate decisions from the Federal Reserve and the Bank of England, alongside the Bank of Japan's policy stance. Investors are keenly assessing the nuances of recent economic data, from U.S. labor market reports and inflation figures to UK employment and inflation metrics, Canada's forthcoming inflation data, and the Bank of Canada's deliberations also add to the dynamic landscape. With monetary policy shifts and economic indicators in flux, the landscape for investors and policymakers alike is rife with uncertainty and opportunity. With the Fed's rate cut decision imminent, investors are keenly awaiting the outcome, focusing on the magnitude of the cut rather than its likelihood. Chair Powell's Jackson Hole speech underscored the Fed's intolerance for further labor market weakness, heightening scrutiny of employment data. The August NFP report's underperformance boosted the probability of a 50 BPS cut to 30%, though this dropped to 15% following elevated August CPI data. However, recent reports from the Financial Times and Wall Street Journal suggest next week's decision is finely balanced, pushing the odds of a 50 BPS cut back to 45%. Investors are now bracing for the Fed's final call on Wednesday, which will signal the direction of future monetary policy amidst ongoing economic concerns. On Thursday, attention shifts to the Bank of England (BOE) following its recent 25 BPS rate cut. The decision was finely balanced, with officials signaling caution on further reductions. Subsequent data has largely supported this stance. PM is exceeded expectations in July and August. The labor market improved, and average weekly earnings remained high at 5.1% YoY in July. Additionally, July's CPI saw a slight rebound, with services inflation persistently high. BOE Governor Bailey, at Jackson Hole, emphasized no rush for further cuts, leading markets to predict an 80% chance of no change at this meeting. However, a 20% possibility of a cut lingers due to concerns from July's stagnant GDP, upcoming August inflation data on Wednesday, and Friday's retail sales figures will be pivotal in shaping market expectations. On Friday, the Bank of Japan (BOJ) takes the stage. In July, Japanese policymakers raised interest rates by 15 BPS and hinted at further hikes, leading investors to predict an 85% chance of another 10 BPS increase by year-end. Despite the BOJ's slow pace of rate hikes, the yen has surged as traders moved away from an overcrowded carry trade due to the different global monetary policies. No policy changes are expected at this meeting, but attention will be on whether BOJ Governor Ueda signals further hikes. If he aligns with market expectations of another increase before year-end, the yen may strengthen further. Nationwide CPI numbers for August, released a few hours before the decision, will also be closely watched. Canada will release its August CPI inflation data on Tuesday, followed by the Bank of Canada's summary of deliberations on Wednesday. Last week, the BOC cut interest rates for the third consecutive time and indicated potential for larger cuts if economic conditions worsen. A further decline in consumer prices could bolster market expectations for an additional 60 BPS of rate cuts by year-end. Retail sales data, due on Friday, will also be scrutinized for economic signals. This week has been marked by significant economic developments worldwide, from the Federal Reserve's impending rate cut decision amid economic uncertainty, to the Bank of England's cautious approach to further rate reductions, and the Bank of Japan's potential policy signals. The global economic landscape remains dynamic and challenging. Canadian inflation data and the Bank of Canada's deliberations have further added to the week's critical economic insights. Stay informed as we continue to monitor these developments closely, understanding their profound impact on markets and investors moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.